Good morning, traders. This is Michael coming to you from GammaEdge on Tuesday, September 12th. We're going to do our pre-market morning briefing strategy session. We'll be covering the market structure via our web app and PBI charts. We'll be looking at the tick market model and then looking at some pre-market price action.
Unlock your potential with a comprehensive suite of investing tools and expert education with GammaEdge. Start your free 14-day trial today.
Tick market model should be our beginning structure and indicator of all of our trading plans. Again, everything is bearish. Market model is turned off. We have PM complex, combo complex, and 0DTE commentary here. Make sure you look at that and understand your if this, then this scenarios and levels heading into today. We'll cover some of those shortly. We're going to go ahead and start with the tick market model. Still down, not closing above a previous day close at all, which includes yesterday. So tick RC continues in a downward bias, which is bearish. Longs should be avoided at this time for most cases in the market, except for the shortest term time frames. Tick RC railroad track down, as shown by our CT bolded white line and shortest term moving averages. Again, complete selling and risk off in the market. Nothing's really changed there for the past basically week that we continue to see this down when we got the signal to turn off up here, right there when we crossed below, and then continue down. Tick RC with the colored ribbon, just the red and cyan turned on here. Again, negative slopes for both, red below cyan, which is our long-term market model, turned off, and then our bolded CT ribbon again, or bolded CT line again continues to make new lows and cannot close above a previous day close. We marked here when the CT closed below the cyan and then closed below the ribbon and transverse to the downside again. Here's everything turned on. Obviously tick RC, red below cyan. You can see the color ribbon is in a severe negative slope and continues down, and the bolded white, which is our shortest term CT, is living under the moving averages and continues down. So again, complete risk off. Long should be avoided except for the shortest term 0DT time frame traders. We'll go ahead and jump into the PM settled complex. PM settled complex, all expiries turned on in our web app here. We can see where spot price closed right above transition. Again, very narrow transition, so that is nice for us, easily and quickly defined. We are out of the money call dominated above, and in the money call dominated below is shown by here our gamma condition. Call speculators continue to come out, which is great. We've seen erosion of the puts in the money puts above us, which leads us to a little bit more bullish stance, at least on the market structure for the SPXP. All expiries here. We do have some out of the money put speculation below us, but the calls at the moment are outweighing the puts, which leaves us in a call dominated position. 4,500 overheads are going to be extremely important as we move up to that level, and then the call domination above us kind of drops off above that 4,500, but we still are call dominated. Below us, we'd be looking down towards the 4,450 level. Again, that's been multiple confluence level for a few weeks on multiple time frames, so that would be where I'd looking. Obviously, staying above transition is the utmost importance if we want to see advanced higher in the market. Here's the SPX 0DTE for today, heading into today. Again, a little bit wider transition, but kind of the same levels we've been looking at, 44.65 to 70 on the downside, 44.50 below that, and then 4,500 to the upside. In the money and out of the money call dominated, so this is a bullish looking stance. And then we see those calls, positive net deltas really drop off about 45.50. So supportive market environment on any pullbacks at the moment. So I'd be looking for price to hold at least above transition or the bottom of transition into this 44.50 to 44.65 level. Again, call dominated on 0DTE. Here's the SPX 1 DTE. So transition drops a little bit and narrows there slightly. Again, needs to stay above transition to get an upward move in the market, 4,500 to the upside. And then we see these out of the money call speculators still alive and well, but we do see some negative net deltas, and you see this little node parking spot there above that 45.25. So we'll see how that plays out today if we do get above 4,500. I'd anticipate some stalling around 45.25 and then up to 45.50. Downside, again, same levels. just kind of a hodgepodge of calls and puts to the downside. So watch your deltas on the downside. Again, 44.50, 44.30 would be that lower level that I'd be looking if we got below 44.50, which I'm not really anticipating for today as we head into CPI print for tomorrow. Here's SPXP, balance of the week here. Again, transition pretty much the same across all levels. 4,500 to the upside, 44.50 to the downside. In the money now, the money call dominated. So again, that's a bullish stance, supportive type for price action. And again, staying above transition will be the key to advancement in the market. Here's the SPXA. We don't usually post these, but we wanted everyone to understand the the puts above us, so advancement might be a little bit difficult. Again, we understand that the SPXP and the SPX are what we focus on the most, but the SPXA is showing a significant amount of puts above us, obviously very large transition. So advancement up with this type of market structure will probably be difficult. 4,500 again is kind of where we've talked about on the SPXP, SPX combo. So again, just keep this in mind that the SPXA, even though we're call dominated, we have a significant amount of puts above us. So call dominated below us is supportive type structure. So again, 44.50, any pullback down to that level, we would anticipate to be supportive type action. Here's the SPX for balance of the week. Again, transition, pretty much the same, call dominated, but you can see the puts above us and then the calls below us. So really at a stalemate here on this structure. So again, advancement may be difficult above 4,500 until we see some of this expire or get mechanically closed. Here's the SPX combo complex. Again, all expiries turned on, call dominated, in the money now, the money below spot price. But again, you see the puts above us, so we need to see erosion. Make sure you reference the previous day or weeks. We've had a structural change. This in the money calls below us has continued to grow. We spoke about this on open mic. It was a very narrow window right around here of that in the money calls, but that continues to grow and expand to the upside as transition grows and expands. And then again, 4,500, 4,525, 4,550, all these are call dominated to the upside, but we do still have those puts, these in the money puts that need to either get closed or expire off for us to have a clear runway up higher on the SPX combo. Here's the landscape view. Again, as you would anticipate, plus GEX has jumped up to 4,600, which is a bullish, again, development. We still have call speculation to the upside, which again is still a bullish stance and thesis. Trans is here, and then negative GEX is down here. So again, supportive type in the money calls below us continues to transform. So that is supportive type action. We'll continue to watch the market structure. Again, CPI tomorrow. So we'll see how that plays out. So again, I would anticipate price action to be supportive as we pull down into some of those positive net delta levels below us. Market structure heat map. Again, if you're not following this thread, I encourage everybody to follow it. Basically, these green boxes here are telling you that the right-hand pane, left-hand pane are call dominated on the deltas. So again, bullish structure look. You can see that we were in the yellow state, but we turned to green as of yesterday. So again, a bullish development overall in the full market. So make sure you keep an eye on this. Here's the sectors. Again, it's about half and half balanced. XLC and XLE, XLY, XOP are the call-dominated delta structures. So again, if you're looking for ETFs to trade or stocks, I would be looking in those sectors first, as those are call-dominated. XBI, obviously, and these others are put-dominated. So just you want the tailwind, the overall sector, and call delta dominated at your back if you're looking to trade stocks. So conversely, with the liquidity stocks, it's the same thing we would look at. We would want to look for the call delta dominated stocks. We have a scan that you can run that we put out in the past week that'll pull up just the stocks that are in call delta dominated and call charm dominated. So I encourage you to make sure you understand those and look at those. That'll give you a nice short list to be able to trade when the market does decide to turn, and it will turn sooner or later. But we want to make sure we're watching tick as our overall market model. But again, these would be the first stocks that I would go to that are call delta dominated if you're looking to get into stocks as the market begins to turn. Here's the rest of the liquidity list. Again, you can see those stocks. Make sure you put those on your short list. The stocks that are red or yellow state, I would put those kind of on the back burner. Again, I would be looking only at the call delta dominated stocks. Lilly was a great entry past couple days. Really had a nice move yesterday. So I would check out the price action in Lilly as it really changed. Or really, it was call delta dominated, but it showed up on the P-Trans to PGX scan, and it really had a nice move. So again, those are the stocks I would be looking at for individual trades. Make sure you set your alerts. Use the TradingView script. You can set alerts at 0gex, P-Trans, and plus gex, so you'll be alerted when price is crossing those levels. You can also use our gamma scans. The 0 to P-Trans scan is great. Run that after the open if you wish, maybe 30 to 45 minutes after the open, and throughout the day to get those stocks that are crossing 0gex. But again, if you want to narrow your watch list, just narrow it to the liquidity stocks, the tickers in there, and that'll give you a very short list that will be very actionable when the stocks are crossing 0gex or P-Trans. You'll be able to get in those and catch nice moves. Again, XOM was one, Visa continues to be one. So again, look at the market structure heat map and understand which ones are call delta dominated and you want to move to the upside. We'll go ahead and look at the pre-market price action. Yesterday was very mapped out with our if this then this. Make sure you're checking those and understanding that. We opened and then really pulled. This is the updated script yesterday, but P-Trans actually was right at 44.70. We pretty much pulled right down to 44.70, which is positive trans, where we were anticipating price to stall and hold because we were in the money call dominated below those levels. Again, same pretty much price action. And then using the vol-u/vol-d command, I was discussing intraday really around 10:30 or 11:30. The 44.90s were really being targeted on the vol-d command. So again, we moved right back up to that 44.90 level, and really there wasn't any targeting above 44.90, and then 4,500 was that really confluence level between 0 DT plus 1 DT, all expiries. So really we anticipated that was going to be tough getting above that level, and that's pretty much what happened yesterday with the price action. So again, we'll see where we open today. Again, if this then this, 4,500 overhead is going to be extremely important. Really 44.75, 44.80 to the downside. We have 0gex at 44.70. That may change in the first morning run there. And COTMP is here. So really kind of the same price structure as yesterday. Getting above this 44.90, then that'll open us up to 4,500. And then above 4,500, we really have the quarters up there at 45.25. So hopefully that helps heading in the morning. IWM continues weak. Qs are sideways. Really not anticipating much movement today as positioning into CPI pretty much is already done. The OI for today was a little bit lower when I looked earlier at the close yesterday. I don't think it's really picked up much for today. Let's go ahead and look at that real quick. 242,000, so we're slightly under 300,000. It was around 150,000 when I looked yesterday. So not really insignificant, but not a significant expiry either. So really transition is going to be important. 4,500 is going to be important. And really just bouncing around this 44.70 to 4,500 might be likely today. So hopefully that helps everybody. Let's make it a great Tuesday. If you need anything, I'll be in the Discord in just a minute. And that's it. Thank you. Goodbye.